Hello, everyone. Welcome back to my YouTube channel. And once again, I want to say thank you. I'm so appreciative and grateful to all of you. I wanted to definitely be able to leave you guys some value today. So, of course, my goal and my reason for this video is to kind of talk to you guys, especially for those of you who are interested in purchasing real estate or purchasing a property for the first time. For my first-time home buyers, be aware that it's possible, right? So I remember where I was in a position where I didn't own any real estate properties, and I've now owned around 26 properties that I've owned, sold some of those properties and kept a few of those. But I will tell you that the possibility and the ability for you to be able to purchase your first property is definitely there. What you just have to do is you just have to believe in yourself. So what I wanted to do is I want to teach you how you can be able to see the way that a lender, a bank, would actually view or look at a property when you do send them a deal that you are interested in purchasing. So if you were to say, you found a home, your realtor found a property, you guys put the property on a contract, you accepted it, and now you want to send it over to a bank and you're asking the bank to review this so you can purchase the property and move in and live in a home or do whatever you want with the home. At this point, what you need to do is you need to be able to understand and see it the way a bank would see it. So the reason for this video today is to give you as much insight, to give you a little bit of the background knowledge and understanding as to how the mortgage industry works, how people actually view loans on the mortgage side. So when you are providing the information to the lender, you can think like the lender, and it allows you to be able to have a much smoother transition process in your mortgage request. I will tell you that, working as a mortgage underwriter, as a real estate agent, and as a real estate investor over my life of my career has exposed me to something, and that is the first time anyone ever buys a property, it is such a very stressful experience that they don't know what to expect, and they end up finding themselves being so stressed out. And one of the best experiences that they should be having, or one of the best and most joyful time of their life, ends up becoming somewhat kind of a nightmare. So in order for us to avoid this, what I'm trying to do is to show you how the mortgage industry does work, how they actually look at these files when these files are sent over to their desk. And by you being able to see it from that perspective, it makes your process much easier and your transition, and of course the ability for you to acquire these loans for your property a much seamless transition. So let me explain to you the most important thing every real estate bank or real estate lender has to look at is they look at 4 C's. So the 4 C's being capacity, cash, credit, and collateral. So again, they look at 4 C's, the 4 C's being capacity, cash, credit, and collateral. So what that means is when they look at your capacity, they're saying, if you were to purchase a property, do you have the capacity to be able to continue to pay for this property over the life of the loan? So what that means is if you were to be paying rent for $1,300 a month, do you have the capacity to buy a home for $300,000, or should you be buying a home for $100,000? And in some cases, if you're struggling with paying your $1,300 a month rent, then maybe you don't have the ability to even buy a home at this time. That's what the capacity is, and that's what the lender is looking at. So again, by you understanding the capacity, it allows you to kind of understand what kind of a mortgage to be looking at and how to be able to determine what mortgage works best for you. The second thing will be cash. Now, when they look at cash, this is what we're going to go over today, which is the assets section. They look at a few things on the asset section, on the cash section, and we're going to talk about those things today because I think that's very important. So this is going to be a 5-part series where we go through multiple scenarios and multiple processes that the lender looks at when you actually reach out to a lender and say, hey, I'm interested in buying this house, help me get a mortgage. So again, when they look at the cash aspect, we're going to talk about those things. But again, the lender wants to know, do you have enough cash? Do you have enough reserve in the bank? And would you be able to continue to pay this mortgage in case of you even losing your job or things not going the way you want it to go? How much ability do you have to continue to pay this mortgage and for how long? And then the next thing they look at is credit. So again, they want to look at what your credit history, and the credit is saying, hey, what is your paying history like? How have you been able to handle your payments in the past, and how would you continue to handle your payments going forward? So again, they look at that process to be able to determine if you will be somebody that they can give a loan to, because if you handled your situation of paying your bills and paying your obligations correctly in the past, then they look at your past as a prediction of future behavior. So again, if your behavior in the past shows you've been paying your mortgage or paying your loans or paying anything that you currently have to pay every month, and you pay those things on time, then they feel confident that you continue to do that when it comes to even the mortgage itself. And then the last thing they look at will be the collateral. Now, on the collateral side, there's a lot of things that they look at. We would have a part of this series that this does focus and talk about the collateral. And then but one I wanted to mention to you is when they look at the collateral, they have to look at a few things, right? So with the new world and that we live in, with technology that allows a lot of us to work remote, if we had a situation where you were called back to the office and your office was in a different state, then again, that collateral becomes something the bank has to understand and say, worst case scenario, how are you going to react to this collateral? Are you just going to wake up one morning, pack up your stuff, leave the house, and leave the property as is? Is that what's going on? How easy would it be for you to be able to rent the property if you had to move, or how easy would it be able for you to resell the property? Basically, how easy is it for that property to be resold because of what the neighbors have been able to do, or what the neighborhood has shown the resaleability of the property looks like? So those are all the factors that they look at, that the lender looks at. But again, all these things, that's a high level overview of it. I want to go ahead and give you guys a little bit of a deep dive into this. Now, I know, folks, my videos in the past, and my videos will continue to be of motivational and inspirational nature. But again, for me to bring you guys value, for me to be able to provide you guys with something that is tangible that you can use, this is something also that I feel, led, and I feel that could bring you guys some help and bring you guys some experience and allow you to be able to do very well in your own personal life, especially when it comes to acquiring some of these real estate assets, if you will. So again, if you're looking at purchasing a property, this doesn't have to just do with the investment side. Like I mentioned, I do have my investment side of things where I help people with investments and explain to them how to be able to get into real estate investment and the process involved in real estate investment. But again, this is tailored for those of you who are looking to purchase a property that you'll be living in and you'll be using as your primary residence going forward. Again, I do have a description link to my course below in the description link. It gives you a much in-depth knowledge. It shows you an example of test cases. Again, if you can think like the decision maker who is making the decision on your ability to purchase a property, then what does that tell you? That allows you again to go in and provide the required information in the required time to make your process much more seamless and to make your life much less stressful. So let's talk today about the asset review takeaways when it comes to assets, how a lender looks at the assets. Again, we talked about the 4 C's. When we talk about assets, we're in the cash section of the assets of the 4 C's. So here, when we look at assets, the first thing we look at, and I wanted to talk to you guys about, is you have different ways that you can be able to acquire assets. And one of the ways that people don't tell you is when you have family members, like for example, your parents helping you, or you have a distant relative who's helping you, they consider those non-occupant borrowers. So a non-occupant borrower can actually help you with some of this asset shortage. So again, this is for those of you who are just starting off, for those of you who are young or even older that are looking to buy your first property. You might not have a lot of cash, but if you have relatives, you have family members that love you and are comfortable with being a person to help you in the process, they're considered non-occupant borrowers. That means they are not going to be living in the property, but they will be on the loan with you to help you get qualified. And at this point, you could be utilizing their assets as a way to help you get qualified. So what is a non-occupant borrower? A non-occupant borrower is anyone who is a parent or relative who is willing and financially able to be able to borrow on the mortgage, but will not live in the home. So again, the non-occupant borrower's job is to be able to help you because they have the financial wherewithal and the ability to be able to help with the mortgage if needed, but they're not going to, right? Because again, you're going to be responsible for handling your own mortgage, but they're helping you on paper to look like you are strong enough to get qualified. So non-occupant borrowers are very good for those of you who will be looking at buying your first home that might not have enough capital saved, that might have a little bit of shortage. You can leverage this resource and use this to purchase your first property. The second thing I wanted to talk to you guys about today, again, we're going to talk about 5 things. And out of those 5 things, number 2 will be reserve requirements. So reserves are always required for every loan. So even for your standard residential property, when you're buying a property, this again goes back to why I talked about the non-occupant borrower first. Because if you're using every last dollar that you have to qualify for a loan, and you don't, and the person who you're asking to help you, say a parent, isn't comfortable as making the money that they're providing you as a gift, then they can actually be considered a non-occupant borrower, meaning they can go on the loan with you and also be an owner of the property as well. So again, it's a way for them to build assets for themselves, but it's also a way for you to start building assets. And now their ability to show that they have reserves can help you again, right? So reserves are always required for every loan, even for your standard residential properties. Reserves can be in form of a checking, savings, retirement, stock, or any liquid assets that can be readily converted to cash. Remember, that means that if you can convert this from, stocks to cash, meaning you sell the stocks even at a loss for cash, that's something that is something that will be considered. If it's, I don't know if cryptocurrency has actually made it on the list just yet. A lot of these investors haven't really put crypto as one of the assets that they feel would be a strong alternative to cash, but that's also another option as well. Now, checking, savings, your retirement, just anything that is considered liquid that you can convert to cash always works very well when it comes to fulfilling the reserve requirements that the lender is looking for. Then another thing too is large deposits. So this is important for you to know, right? So when you look at large deposits or unusual transfers from all accounts provided, what this means is in certain cases, there will be you might have, you might be someone who makes $3,000 every 2 weeks. And then all of a sudden you have one time that maybe a family member, a friend, an investment you made or something gives you a $5,000. So you have a bunch of your deposits show 3,000, 3,000, 3,000, and then all of a sudden you show a $5,000 deposit. That will be considered a large deposit. And in the case of something like this, you have to have documentation to support how you got that cash. So it's important for you to be able to know when you're looking at your statement, if you're somebody who is going to get funds from friends or money from, let's say you make some good money on FanDuel, or you make some good money on any of these sports betting sites and something like that, and that's great money that comes into your account. Well, you have to be able to source this, right? So another thing too is unusual transfers. So if you're making transfers to friends and you're giving maybe somebody that that you're close with $50 every 2 weeks, or you have a girlfriend that you're helping out or a boyfriend that you're helping out and you're giving them $100 every month, if those things show as transfers that are coming out of your accounts, and you would need to be able to show proof. And in some cases, you would need to also get additional documentation to cover those transfers. So again, what I'm trying to say is minimize how much documentation you provide to the lender if you don't want to have to go through a process of answering too many questions. So if you have 5 different accounts, use the accounts with the most money in it and the list activity. It helps versus using all the accounts that show all the activity and sometimes expose yourself to too many questions. So again, all large deposits and unusual transfers from all accounts provided need to be sourced. The next thing too is if you have any joint accounts, right? The borrower, which is yourself or anybody that is borrowing on this loan, would have to show 100% access to the account and to the funds available. Now that's called a joint access letter. So in most cases, that is required you would have to connect with the lender and find out how the lender wants this. Sometimes they want it notarized, sometimes they just want it date and signed. But in most cases, you have to show if you have a joint account. So if you're a young person who has a joint account with your parents, then you have to be able to get them to provide a joint access letter, or sometimes a CPA to provide a joint access letter saying you have full access to this account and to the funds in the account. And then the last thing that we'll be talking about too today in regards to assets is, if I've seen certain cases where people say, well, I don't have a lot of money, but I have good enough credit, and on Credit Karma, I'm being offered $6,000 unsecured loan. What if I take that unsecured loan out and use that money to pay for my closing costs or my down payment, or even use it as reserves? Well, unfortunately, this doesn't work. So what this means is personal unsecured loans are not an acceptable source of funds for the down payment, closing cost, of financial reserves. I'm sorry I didn't make the rules, but that's just how the rules work. Now, I'm telling you guys this because when you're looking at purchasing a vehicle, in some cases, you can take out a personal loan and you can use the personal loan as a way to actually put down as a down payment on the car. But on your home purchase, unfortunately, you can't take out any personal unsecured loans and use that for the down payment, closing cost, of financial reserves. So again, folks, the reason for this conversation again is to help you guys get a clear understanding how to think like a lender. The description link to the course is the link to the link to my course is in the description below. Forgive me, I'm tongue tied. I am not going to edit this, by the way, so you guys are going to get the full Roy edition. But again, the link is in the description link below. So please click on the link, get access to it, learn the way the lender thinks. Like I said, if you know the way somebody thinks, then you have a leg up, right? So just like with your ability to get a mortgage, I know so many people go through the process, they're nervous, they're not ready to take on this responsibility. They look at it as a big deal. And in order for you to just overcome this little concern, spend a few dollars, get the knowledge, and then use that knowledge to enhance your ability to grow. So again, the availability of the course is in the description link below. Check it out and let me know if there's anything that I can use to help, or anything where I can help you guys. Leave a comment. Don't forget to like, share, subscribe to my channel so you can continue to get more information. And I will be providing you guys more motivational content as well. Thanks again. Peace.